Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, being self-employed, running a small business, and generally helping you to understand the tax system as it applies to you. So today, as part of our bite-sized demo series of helping you to understand how to complete your self-assessment tax return, or the information that needs to be included. And we're going to talk about completing the self-employment, the short form section of your return. Before I do that, if I could ask, if you're new here, please do take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to access other information that we have available on a whole host of different topics, all aimed at supporting you in your self-employment. If you navigate to the playlist section of our YouTube channel, you will find the topics loosely catalogued per trading style, and you will also find the playlist with other demo videos for other sections of your self-assessment tax return. So back then to completing the self-employment, the short return. So as you will likely already know, if you are completing your self-assessment tax return online, you will be initially presented with the options to tailor your return, therefore telling HMRC which sources of employment are relevant to you. The beauty of doing this is that if a source of income is not relevant to you, and you don't need to have anything to declare on that, you won't be presented with the forms. So therefore, you're only shown the forms that are relevant, that you need to complete. So if you are self-employed and your turnover is under the threshold, normally in line with the VAT threshold, then you will only likely need to complete the self-employment, the short form, if everything's fairly straightforward. So that is what I'm going to talk about today. So what I'm going to do is I'm just going to show you the form that will be presented to show you, just to be able to show you the information that you will be needing to include. So when you get to the self-employment section to complete, initially you'll be putting a description of the business, and this is just a really sort of like basic sentence of what your business does, what you're doing, and what industry you're in, and I'll say just a sort of brief explanation. Some of the boxes you'll see when you're completing online are optional. If you leave a box blank and it has to be filled in, then it won't allow you to carry on any further. So some of the information here is optional, but you should try to enter as much information as possible. So if you're a new business or you're at the end of trading, you have the opportunity to notify HMRC here, as well as saying which date your books or accounts are made up to. So of course we will have taught in other videos about basis and period reform. So for the intents of this video, I'm going to just work on the assumption that that everybody is submitting accounts that are made up to either the 5th of April, i.e. the end of the tax year, or rounded to the end of the March, i.e. the 31st of March. And again, we have another video where we've explained that how what HMRC means here, whether you're using the cash basis or the accrual basis, and how that has recently changed. So before, what you didn't need to, if you didn't need to tick the box, you do now, and before, if you did, you don't now. So here again, the short form is only available if your income is under 85,000, and so here you'll put your turnover. So that's all of the income. And it's really important because quite a lot of questions that we get ask if it's okay just to put the just to put the total profit here, but it's important that HMRC know the total amount of income that you've had. So regardless of what that is for, whether it's to cover costs, whether it's offset against profit, and there's various reasons why it's important that HMRC have your turnover. VAT is one sort of one factor that that is relevant to your total money received, not just your profit. And also as MTD for ITSA becomes mandatory, HMRC it would become more and more important that HMRC know what your accurate turnover is, so that they know which threshold that you fit into. And again, trading income allowance, we've covered that in other videos. And if that's relevant, then you would put that, you would be putting that there. So allowable business expenses. So you can, you do have two options here, and you were presented with the question, do you want to break them down or just want to enter them as one single total? And that is absolutely fine to just enter the one single total. As long as, of course, you have got the breakdown of how you've arisen at that figure in case of the event of an inspection into your return, that you can explain to HMRC how those figures have arisen. It is acceptable to just enter the total cost, and then that will bring you your net profit or your net loss. And so hopefully this makes sense now, and this becomes more clearer why you put the total amount that you've received in the turnover box in box 9 there, and then your total allowable expenses, breaking them down if you wish. And this calculates the net profit, and it's the profit that is relevant in terms of your tax liability. So it's your profit that would get carried forward to your tax calculation at the end, and that is what you will be taxed on. Obviously, if you've made a loss, we're not going to explore losses in this video, but it is important that that's logged, even if you have made a loss, so that can be utilised efficiently if relevant. And then you would come on to any capital allowances. And again, we go into more detail on this in other videos, but this is the option where you are able to tell HMRC about the assets and whether you're depreciating them, claiming capital allowances, or claiming annual investment allowance. And they will, any capital allowances that you do claim will adjust your taxable profit. The balancing charge is where you have already claimed capital allowances, and you have made a profit effectively when you've come to sell it, or perhaps you haven't claimed any capital allowances, but you've just made a profit, so you've got income from a sale of an asset that would go on your balancing charges. And then we would have the total taxable profits, which is going to be carried forward to your tax calculation. And then we talk about have the opportunity to talk about class 2, class 4 national insurance and CIS deductions. So if you are a CIS subcontractor, if you are, you will know that. So if you don't know, if that makes no sense to you, that phrase, then it means that it's not relevant to you. If you've had CIS deducted by your contractors, they will have given you a deduction statement each time they've made a deduction, and the total of the deduction should be included here. That is so that can be taken into account against your total tax liability. And for class 2 national insurance, this is where you have the option to pay the class 2 voluntary. So as you will be aware, if you're with the phasing out of class 2 national insurance, there is a sort of a band of income currently where you will you would be liable for Class 2 national insurance, but it is treated as paid. If you are below the small profits threshold, it won't be treated as paid, and you would need to pay that voluntarily if you need the qualifying year. And you also have the option here to be notifying HMRC if you are exempt from paying Class 4 national insurance. So again, I'm not going to go into big detail on specific things because not everything will be relevant to everyone. If you have questions on any of the things on the short form, please do pop the questions in the comments. This will help us to understand what is going to be helpful for people to have more information on, and we can follow up on sort of specific topics on the basis of that. But hopefully this helps to give you an overview of what information is needed. Even if you are engaging somebody else to submit your tax return for you, it's obviously useful for you to have an understanding of what information is required, because that helps you to ensure that you provide the accurate information. Of course, it is important with any sections of your self-assessment tax return that the information presented is accurate and correct. So if you are struggling and you're not sure, it can be well worth engaging somebody to help you to do this. And of course, as we always say, if you are engaging somebody's services to help you, please do make sure they're qualified to be doing what they're doing, that they're a member of a professional body if applicable, and that they have professional indemnity insurance, because if you're engaging somebody to help you to make sure that it's correct, it's important that it is so, because ultimately the self-assessment tax return that is submitted is your responsibility as the taxpayer. So if there is an error, you still will be liable and responsible for that error, even if somebody else submitted the return on your behalf. So hopefully this has been helpful. If you haven't already, please do subscribe to the channel. If the information has been helpful, please do like the video. That helps us to understand which topics are helping the most people. And as I say, if you've got any questions or anything you would like further explanation on, then please do pop your question in the comments. Thank you very much. Goodbye.